Hello and welcome to another episode of Daily Market Mastery with me, Rauchenwald, on this sunny Monday, or actually quite kind of changing Monday. It was a little bit dark in the morning. Anyway, I hope you all had a great start into the new week and a great weekend behind you. As always, before we jump into it, let's get the usual disclaimer out of the way first. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that you see in this live stream / video, so the charting software, the broker, the strategy I'm following, and so on, are linked in the video description down below. And if you're here for the first time, the one thing I really can recommend is that you use the link in the description down below to read the Elliott Wave principle online for free, or use the link to get yourself a physical copy. Now, with that said, we can jump into it. Oh, wrong button. There we go. And as you can see, we are having a break even starting to the day. I mean, slightly green, but it's pretty much break even. What do we have for this week? We have our usual GameStop call options that we wrote against the shares that we own that are going to expire this Friday, so with a $30 strike price. So ideally, obviously, we would have them expire worthless, which means GameStop should stay below 30 in order to just collect the premium, and we can then write further call options for next week. The perfect scenario would be GameStop increases to, let's say, 29 or something, so that we get a higher premium for either the $30 call options for next week, or to allow us to write higher strike call options. So either way, that's for GameStop. And other than that, not much changed. We still hold one Leaps call option for Grab and one, middle, it's not a leap, it's not a year out, but it's like till January expiration in Novavax. GameStop opens today slightly red, or pretty much sideways, to be honest. We're gonna look into the charts right now. So, still have to start motive wave, so just a second. I'm gonna have finished my coffee in the meantime. So there we go. So we see in GameStop that we're pretty much moving a little bit sideways. So there's still the option that we either go up from here, in which case technically our corrective pattern should have finished here, making it a little bit tricky because it looks like here we have a 3-wave move when we would need theoretically a 5-wave move. So again, my prediction or my assumption still hasn't changed. So right now, unless we go higher than, what was it here, 25? No, high 25, 24. So unless we go higher than this, I still consider it possible and likely that we'll get another push down into the area of 15 before we continue our journey up. So, and yeah, that's about GameStop. Not sure if it makes sense to look much closer here. Let's check the 4-hour chart. Well, we likely have a 5-wave impulse down here. So 1, 2, 3, 4, 5, followed by a 3-wave pattern here. So we supposedly would need to have 5 waves here, 3 waves here, and another 1, 2, 3, 4, 5 wave here. So technically, if that's a corrective pattern, so A, B, C, for example, could try to verify that at least partially. If we assume that A is this, B is this, then although we exceed our usual expected target areas here, so but technically we would expect the downwards movement to follow here. Either way, we're going to stay on the daily chart for now until we have some bigger movement that either confirms that we are going to touch the $15 area, or that confirms that we indeed ended the correction here and are in the upwards trend now. Moving on to Novavax. In Novavax, so we had another push up here. The big question is going to be, as said, like it's already been for a couple of days now, is our correction finished here, or is this going to be some kind of triangle pattern to officially finish the correction? It's possible theoretically that it is a triangle pattern that ended here. However, we usually would expect wave E to break below this line here. Either way, we are also in a waiting position here with Novavax. So either we will see a push through this line here, so the connection of our supposedly point B and D, or we will see the push down through that line to really finish yeah, a potential triangle pattern before we go further up. Long term, however, the outlook hasn't changed. I still expect Novavax to go up substantially over the next couple of weeks and months. Yeah, with that, we can take it from the top. So as usual, Barnes and Noble's education. Yeah, last week we already finished with the assumption that very likely we might have finished our corrective pattern, or potentially we might have finished our corrective pattern here. We can see that this looks like a three wave move, A, B, and currently wave C. And in that last move, we can see a potential 1, 2, 3, 4, and 5. Question is, so as long as we stay above $9.02, that assumption still holds, and we would expect the move to go here, so continue in the next 5 wave impulse. But however, it's still possible that this move down here hasn't fully finished, and that we retrace first into the area here where we have the overlap of the 100% expansion for this three wave move, as well as the 61.8% retracement of the previous 5 wave move. It's going to be interesting. It should be resolved within the next couple of days, considering that we look at an 8-hour chart, so we should get enough candles. I mean, there is the minor chance that we just move sideways for the whole week, but I would actually assume that we either get a substantial upwards movement or that we break lower than this, and which would give us the confirmation that we first get here. Personally, I would consider entries right now as not too bad. There's not very much. I mean, we're talking about 10% downside here. However, one could also wait to enter on this level here, so around 830 to 842 or 830 to 845. However, it's possible that whoever waits for this level might miss the train, because we already have the 50% retracement here, and it's possible that we're going to bounce from here since we already reached our minimum target as well. Moving on, let's take a look at CrowdStrike. Haven't looked there in some time. Theoretically, we're still waiting here to hit the minimum target at 309. So I'd expect that potentially we will get another push up here before we continue the journey down. However, considering that we nicely hit up there, that retracement is not so nicely. It needs to be like this. Yeah, that we nicely hit the 61.8% retracement. It's also possible that our corrective move here actually already finished and that we go down from here. Either way, I consider, while short term there might be a little bit upside, as we can see 10% room to the top roughly, I actually expect that we will see way more downside with around what, let's guesstimate that, what's that, 30% or more to the bottom before that overall bigger correction is finished. Moving on, grab, as said, we have a leaps position or call. We're actually waiting for a break through the 404, which would more or less confirm that we indeed had our bottom here, and that we're going to see, most likely, at least in my opinion, quite substantial upwards movement over the next couple of years till my call option expires. The next profit target here would be around 200% up in the 940 to 1088 dollar area per share. Again, we're looking here at a weekly chart, so that's going to take some time to develop. Yeah, moving on, immersion. Yeah, we're still moving around the area of the 61.8 retracement and the 100% expansion level. How low did we get here? 843, and here we are 841. So it's still possible that this is actually the bottom, and that here we are slowly developing the next 1, 2, 3. Just like in other similar stocks, we should within the next 2 or 3 weeks actually have a resolution to that question, because either we will see some stronger upward movement that makes it clear that the correction is finished here, or we'll break lower, and then the next possible area for turnaround would be around $7.71. Moving on to no unexpectedly broke or above the 30-cent mark. So maybe we get a chart today. I'm really gonna try to, let's actually say open chart window, which opens a new one. Maybe we get one to load for a change, so we can actually analyze the development. Overall, I still expect it to go lower. So, but obviously, if in the meantime it recovers a little bit, that's also perfectly fine. Well, yeah, doesn't look like we get a chart. I don't know what's the issue, and since I don't hold a position, I don't care enough to spend some time investigating that. Yeah, if or when it breaks below 20 cents, we're going to start looking more actively, and then it's going to be worth to figure out why the chart is not lowering for no laps, yeah, to potentially find the right entry. Looking at cost now, again, getting a stronger push up. Question is going to be, so we still have the point that we bounced at the 50% retracement multiple times now. Question is, did our correction officially end here? And this is the next impulse pattern upwards developing, in which case we should see this week, we're looking at a daily chart this week and next week, stronger movement up. Confirmation would be, in my opinion, if we break above 1055. Obviously, that's still a little bit of way to go. On the other hand, this could also turn into a free wave A, B, C corrective move that's then followed by breaking through the 50% retracement, in which case we'd have to reconsider the labeling here. Yeah, overall, I think there is quite some upside still left. Question is how long that sideways movement will continue first. We don't need maximum. We're going to look at the Nasdaq later. NEO again having a strong day. We now reached the 100% target for a fifth wave. We can see we actually exceeded it. If we look here, we're going to have to clarify a few things. We have here wave 1, 2, and then we have here wave 1, 2, 3, 4, 5. We would consider here the 538.2 expansion level as a fitting target for wave 1, 2, 3, and then from there, I mean, it could possibly get another push and reach the 561.8, and only if we visibly break through that, we would consider the other levels. I'm gonna move that a little bit back for now. So to clarify that, using Elliott Wave Theory, we basically have wave 1, wave 2, and now we're in the third wave. Usually that third wave terminates around the 261.8 extension level of the first wave. That's just, in my experience, what often happens. But it can terminate around any of the 100 or 38.2 and 61.8 levels that you can see here and further up. Now, if we're in the third wave, we also have to be able to label that third wave. So if we, for example, look here, we have visually our next wave 1, 2, and we can see that wave 3 terminates around the 261.8 extension level, which makes this potentially wave 1, 2, 3, 4. So, I mean, 3 could terminate here. Moving the wrong thing here, sorry. Wanted to move the expansion. 3 could theoretically terminate here, here, or here. It doesn't change a lot in the end assumption. Now, when we know wave 3 and wave 4, we can add an expansion, and the 61.8% and 100% expansion levels are our profit targets then for the fifth wave. Yeah. So that's not guaranteed. It's not guaranteed that we always reach both of them. Sometimes we will not even reach the 61.8 fully, but usually we reach at least this one and then terminate anywhere in between here, which usually would have been, in this case, the 461.8 area. In this case, we gapped through that area, which brings us to the next target area for the third wave, which is the 561.8. So 1, 2, 3, 4, or 538.2 that we already reached. So it's possible that from here now, we will actually get the next retracement pattern. So it's, I mean, there are two options. Either we shoot a little bit higher, terminate at 561, because again, that wave here also has to subdivide into 1, 2, 3, 4, 5. And we can see with the naked eye what might be potentially 1, 2, and then again, so there is a chance that we shoot above $8 in this movement, even if today or in the current 8-hour period we'll get a red candle. So there is a chance for that happening. However, we also have to consider, so right now I think you consider it's more likely that we're actually terminating the third wave here, which makes then up 1, 2, 3, and we would then get wave 4. And once we have wave 4, we can apply the same expansion just on a bigger scale to get our wave 5 target, which means short term, there might be a little bit more room upwards, but it's likely that we are soonish going to terminate that third wave, so that entire third wave, and get a correction in wave 4. Long term, however, there is more upside, because after wave 4, we should get another fifth wave, which again should make a new high. Doesn't always have to, or it doesn't have to make a new high, but it usually does. Yeah. So NEO, not the best time to enter anymore. My NEO position is obviously not that big. We only hold 27 shares with an average of 517 as said. So on average, we got in here. Actually, we got in with some shares even earlier, and yeah, just recently bought a few extra shares, which increased our average. Either way, yeah, I'm gonna hold to them because the pattern isn't finished yet. So we have 1, 2, 3, potentially not even finished. Then we get 4, and then we get 5. So there's still more upside to come. Nvidia, what is Nvidia doing? Nvidia is, I'll have to move a few things. Nvidia reached the minimum target, and visually this looks like a 1, 2, 3, 4, 5 move to me, which means while the fifth wave here didn't make a new high, it looks like we are about to correct this move here. So I'm gonna get rid of a few things that we don't need on the chart anymore. So it looks like we are about to correct this move here, which means we would expect a move down to 113, which would then mean we finish this 1, 2, 3, 4, 5. If we're not finishing or correcting this move, we're at least correcting this move. And here we already touched the 38.2 level. So it's possible that this is the entire correction and we're going up from here, but it's also possible that we're currently correcting this entire move and that there's still a little bit more downside. I don't think an entry would be very bad right now. Stop loss, however, would need to be at 1979 to be really, really on the safe side as far as the pattern goes. But yeah, either way, either we turn around at the 38.2 retracement, so correcting this move that we already did, which means there would be more upside now and potentially strong movement following, or we are correcting the entire move, in which case there is what, 10% downside, or not even 10%, less than 10% downside, with again, after the correction is over, I mean, to the stop loss, it's obviously a bigger downside, but to the next target area that we would expect is a potential turnaround pound, it's less than 10%, and with more upside there to come. Yeah, moving on, SMCI. Surprisingly got another dip here, yeah, so it turns out that I was partially wrong here. So we had the overlap here of the 61.8 expansion for, basically we assume that this is a wave A, wave B, and wave C. So this wave A and B has an expansion where we get profit targets here. So the minimum profit target, the regular profit target, and the maximum profit target. And we see that we touched the maximum target already here. So which points towards, okay, this would mark a potential turnaround point, which happened here, but then we got that push down here. Yeah. Now in that potential wave C, we have wave 1, 2, 3, 4. And then wave 5, and then if we look at that, so I'm going to move that one smaller. If we take that third wave and fourth wave, we can use another expansion and we get the profit targets for that fifth wave. And we can see that the minimum target here, that area pretty much overlaps with the maximum target in quotes that we have for this big ABC move, which already points towards this potentially being the end of the move. Additionally, if we look closer, we have another 1, 2, 3, 4, 5 going on in here, and there we can also see that the 61.8 target area for wave 5 overlaps in that area. So I'm really surprised that we got another push. It's not that it's not fitting, it just means that basically, and actually with that push we have to adjust at least that small last thing here. Yeah, that actually we have to do, which brings our minimum target area down here. Not sure if we'll get to see that, considering that we have the maximum target area here, and there's still, it's like what? It's like almost 10% between those two. Yeah, so yeah, so basically this candle changes the pattern a little bit and gives us the option that there might be a little bit more downside left. However, after that, we still would expect a bigger upwards move, and even if it's just, yeah, like an ABC corrective pattern that again recovers, I don't know, like, or would offer a 50% upside. Either way, just like I mentioned in past episodes of Daily Market Mastery, I would not get into that because the risk reward ratio is not good enough. Yeah, we're still gonna follow it. Maybe something changes and it might be worth an entry, but so far it hasn't been. Moving on, Wheeler Real Estate had some upwards move, and there we had some labeling mistakes because of yeah, like somehow flaws in the data, so the data in the charting software wasn't accurate. Yeah, we're still around the 100% retracement area here. So basically making this wave 1, 2, 3, 4, 5 for a big wave 1. And then instead of, I originally thought that this is the entire correction, A, B, C, which hits the 50% retracement. And was then followed by this, and originally this actually, so on my chart, originally this made already a new high because of the wrong data that somehow got loaded. However, because we didn't make a new high, the adjustment actually is that the correction is like this, so A, B, and C, where we're right now on the 61.8 retracement of the entire impulse move that we had before, and on the 100% expansion level of this ABC or potential ABC move. So right now would mark a potential acceptable or good entry. However, one has to consider that the stop loss would need to be at 2.85. The upside here would be at least 61.8% of this move added to this low point if we're right. Yeah, so risk reward ratio also not that great. However, there is potential that we'll get to see some upwards movement soon. Now looking into SPY, probably let's see how SPY is doing. We're moving sidewards. We already reached our maximum target area for 1, 2, 3, 4, 5. Question is, do we also have 1, 2, 3, 4, 5 finished here, in which case we would start to see a correction of this entire move, which would then potentially take us down again to 538. If we add a retracement here, we can see that at 540 we would have the 50% retracement mark. So anywhere to 548, 540, that would be where I would expect the retracement to go if we already have 5 subwaves finished here. There's however the chance that first we go a little higher. However, I would not enter right now anymore because the downside for this move is bigger than the upside for any potential move left, at least according to what I see on the chart, which may not be right. Only time will tell. So again, don't forget, do your own research as well. Yeah, moving on and to the Nasdaq, which probably has a similar pattern. Yeah, so we see we reached the minimum target. We didn't reach the maximum target here. The question in the Nasdaq is going to be, will this, or is this 1, 2, 3, 4, 5 already finished, or is there still a little bit more room up? There is overall, yeah, there is overall to the maximum target around 3.5% left in growth to reach that line. Whereas the downside is again bigger because our next correction would correct this entire move, in my opinion, which means we would have way more downside. And again, I would not enter right now anymore, but instead would wait for it to visibly finish the 5th wave move and start the correction downwards, and then either start shorting or go short or buying puts or writing calls, or then wait for that correction to hit one of the levels that we can then determine and then enter with long positions or calls or by selling puts. Yeah, and that sums it up for today. So that's pretty much it. I hope you were able to take something away from this. Yeah, don't forget, like, subscribe, enable notifications so you don't miss out on future live streams. And with that, I wish you a pleasant rest of the day, and then see you all together again tomorrow around 5 minutes before market open for another episode of Daily Market Mastery. Till then, bye-bye.